Good evening, traders. Welcome once again to another live session. Welcome to today's trading digest, where we're going to look at some charts and also to learn how to mark your charts, look for potential opportunities in the charts. So we'll crack right into it. Good evening, everyone. Thank you. Welcome. If you can hear me loud and clear, just put L in the chats. Loud and clear, put L in the chats. Welcome. Amazing stuff. Okay, so we'll go straight into it and see how best we can approach today's market situation. Okay. So well, let me just give this quick one before we go through it. So the reason why we need to do a top-down analysis, it's to give us a context to work with. It also gives us a confidence to approach our trading, and as we build that narrative on where price is likely to go, or the direction price is likely to go, or the exact location price is likely to hit. Once you build that narrative, you have that confidence that this has a high probability of doing, the market has a high probability of doing that. So once you do your top-down analysis, that's one thing that gives you confidence. It also helps to increase your accuracy in terms of taking your trades. It increases your accuracy as you go about taking your entries, and it also makes trading less stressful because you've already gone through the charts, done your top-down analysis, and then so you have the bias where price is likely to go as the market plays out. And then also you're able to take advantage of some massive moves that happens in the market. You're able to take advantage of some massive moves that happens in the market. So with that said, let's go straight into it. No time wasting. Okay, welcome once again, everyone. So on the charts here, I have SAU USD as gold. As we can see, gold has been making its moves higher and higher. So as you can see, this is on the weekly time frame. Where gold has been striving higher and higher. So currently, this is what we have. On gold. As we can see, it's been making higher highs, higher low, higher high, higher lows, higher high. Okay, so now we can see on the charts that on the weekly time frame we have a recent break of structure, and we can see that the last 2 weeks price has been pulling back. So we had this push down. Here as price made this high. So this is the weekly high that we have here, where I have this blue line. So that's the weekly high that we've created. And then over here, price left these wicks but we could not have full body close underneath these wicks, and price turned round to retest this area again. But now we can see we have a break of structure, or market structure shift, or some will call it change in character on the weekly time frame. So we have a full body close below this candle here. So full body candle close below here. So now if we go on the lower time frame, we'll get more detail on this. So as we have a full body close below this low, causing a change in character, market structure shift, we expect price to at least come back to these areas or continue to its as it's in a bullish momentum, it could turn around and continue its bullish momentum. Or we could have something like this. We'll pick this last bearish candle that was printed. As we have a change of character here, we expect price to at least make its way up here, and once it gives us some indication of further going down, because we have a change of character here, so at least we expect price to do some bearish moves. As we can also identify that there is these areas of liquidity that has been left here. These areas of liquidity we can identify right here. So these are areas where stop losses, market orders are resting. So those who enter the buy from here, these are areas where you can find your stop losses resting, and also some market orders resting here. So there's a high probability that price could come all the way to sweep all these areas before turning round to either test this area and then sell off. Already we've had some amount of or some movements in terms of going to the upside for some time now. If we look at the charts, it's been in this upward move right from here. Let's see. Price has been in this upward move right from here. That's from Monday 22nd of October when this move started. To the upside. So we've made quite some move from then, which is calculating the pips. So this is giving about 261 pips has given since then. So if you caught this and then you've been in it all this while, it would have been a very nice money creating, wealth creating entries. Okay, let's go straight into the top down analysis. Let's continue from here. So we've been on the weekly. Let me take this off. So we've been on the weekly. We've identified this high area here, a potential high, weekly high. So we go down to the daily. Let's see what we can find. So the idea is to identify the direction that price is likely to turn around and go. So we can see that currently gold is in this area of consolidation after this long move up here. It's in this area of consolidation. So on the currently we have this break of structure that we marked on the weekly time frame. We have this break of structure that we marked on the weekly time frame. So seeing this, the next thing we expect is price to make its way back to this origin. So let's refine this origin that we marked on the weekly. So the move started right from here. Let me reduce this volume a little bit. Looks like okay. So looking at this, the main origin was from here. So this could be the origin of the move. So mind you, this is a daily chart, so this could be one origin, one target, and also we can mark here, since this is the last candle before this move that broke this structure here, we can mark this candle here, since it also got an imbalance attached to it at the moment. As we can see, this is on the daily chart, so it's not fully complete because we need to have a third candle. If the third candle is not able to trade back to close the imbalance here, then we'll say we have the imbalance here. But currently, as it is now on the daily, we can only identify this as an area of supply. Let's put that way. Supply, area of supply. This is also a possible area of supply. Hello everyone, welcome once again. So possible area of supply. So these are all narrative that we are trying to build to see the possible areas that price could go. So we have this areas of supply. As I said, this on the daily, so we can move down to the 4-hour time frame. The 4-hour time frame to further refine these areas that we are anticipating to have price revisits there. So just a quick one, just to okay, let me refine this one. So over here on the 4-hour time frame, we can refine this to, as we can spot this let me delete this one for now. Let's put, so this is the break, this is the break of structure that we are looking at now. Okay, so we have this break of structure here, and the origin we will say is from this small candle here. So we're trying to refine it. Okay, so I hope you can see it. Let me enlarge it a little bit so that we can identify what I'm trying to do. So with this area identified as our area of supply, the next thing we also want to identify is imbalance, some inefficiencies that we can identify in the area, so that we can validate it to make sure it's imbalance supply area that we can work with. So this now becomes our imbalance area. We had this break of structure. This is the imbalance that we have identified on the 4-hour time frame, and then we also have this supply area here. Supply. Okay, so now the plan is, if we look left, let's look left and see if there's anything there. So we're looking left, we can also identify that there were all these we had all these liquidity areas here, liquidity areas all this way here. That's we have currently the price has swept these or cleared this liquidity. It's only left with this one here that we can see is pending. This also filled this imbalance here that left this area of liquidity. So with that said, we can say that price has got something below that is aiming to do. It got something below this area that is possibly, but it's cleared some of this liquidity. So let's see how far. So it got to this low and then turned round. So with the market open, let's mark this area here where price, the last area imbalance demand area here. So that's the demand area. Let's also mark any fair value gap attached to it or imbalance. So the imbalance we can spot is on this side. That's where price is currently tapping into. And then mind you, on some point, back testing on gold, in most cases it taps into the imbalance and then makes its way back. So currently we have gold tapping into this old area of imbalance where I think it's already been filled anyway. So this has already been filled, so we will not place much emphasis on it. So it's just the demand area here that hasn't been filled looking at the 4-hour time frame. So what we have here, likely to have something like this if gold is turning around to the downside as it's already began. So we're likely to have something like this and then that. So we have this area of inefficiency here, this inefficient area here as well, and then we also identified one here. So looking at this, we can target gold doing something like this before it pushes down. Other than that, we just if gold happens to trade above, let me delete this one for now. If we trade above this area, we could have something like this and then to the upside. So these are scenarios that we are building. So if we trade above this high, then we will do the same thing. If we break this structure here, or if we cause change in character, so if we cause a change in character here, then we expect price to pull back to at least somewhere here before shooting off. So if anything, we'll be targeting here as it breaks above this area of imbalance and the supply area. It could come back to test it. So once it breaks above this area, it now becomes an inversion fair value gap or an inversion imbalance where initially we expected it to tap into the imbalance and then turn around and go the downward side or the bearish side. But if that doesn't happen and it breaks above it, what will happen is come back to retest this area and then shoot off. So those are the scenarios on the 4-hour time frame. Let's further refine this. Let's go to the 1 hour time frame. Let's see what we can see here. So on the 1 hour time frame, we can identify that this is the, let's refine this. Okay, so on the 1 hour as well, we just leave it as it is. We leave the supply area to be as it is. So the area we are referring to, or the break of structure, now becomes here. Break of structure. So we have the break of structure here, and then this is the area that the price is currently reacting from the old fair value gap area. If we go to the left, let's see what is there now. Yeah, so it's the same old fair value gap area that was identified on the 4-hour time frame, on the higher time frame, that the price is reacting from there now. So for us to sell in this market, we want to see price retracing back, filling these imbalances, or making the market efficient, thereby tapping into this area before selling it off. So just a quick one, just to refresh our minds. So if to find or to explain what an imbalance is, or inefficient market is, we have a downward move. Price gives a high, a lower low, lower high, like that. So we have this kind of scenario. So anytime price, so over here we can see that the price has created all these supply zones. It created all these supply zones. So let's move this, filling all the imbalances along the way as it makes its way downward. So in a situation where there is a gap, like for instance from here, from this point on, so these are all supply. So in a situation where we have an area that hasn't been tapped in yet, leaving an open range, open price range, where there's an inefficiency, the markets will have to have to come back, trade into this area to make it efficient, thereby clearing all the inefficiencies there, or the imbalance there. So in a nutshell, this is how imbalances occur on the chart. So once a supply area is created, we expect price to tap into it before it goes away again. Once it's created, price moves away, come back and tap into it. So this can be on the opposite side as well. This is a supply, that's a downtrend. So we can also have this in the opposite side, where we have price creating demand area. So this in effect will be demand areas. In effect will be demand areas. And one thing we have to bear in mind is, for these areas to be valid, we have to have a fair value gap attached to it. So as price creates this demand area, moves away in the movement of in the course of its moving away, it creates a gap, or the imbalance area, where price hasn't been that area hasn't been traded into. So this move here normally will come back and trade into that area of imbalance, or filling that area of imbalance before moving away again. So that is how I believe that's how the imbalances kind of work. So I believe this makes a lot of sense with this kind of explanation. Alright, so let's analysis on gold. Our analysis on gold. So okay. So our analysis on gold. So that's what we have here. So our expectation is for price to trade back to this area, then we continue the downtrend. Looking at it, we are kind of having a reversal in direction from what we can see, as we can see a change in character even on the higher time frame. So we will just play it as we see it. We will play what we see, not so if it plays out like this is how we're going to take it. This is how we're going to take it from here. So we'll see how it goes as the market opens. We'll see how it goes as the market opens. So on top of that, we should also bear in mind we have all these liquidity areas here as well, that it could be an area to also for price also to go into. But currently we have this let me enlarge this a little bit. Oh, sorry, you can't hear me. Just a moment. Voice is breaking. Okay. Hello. If you can hear me now, let me know, please. If you can hear me now, let me know. I've moved quite closer to the mic now. I think I was a bit away from it. So let me know if you can hear me, if the sound is okay. Is the sound okay? So that I can continue. If the sound is okay, let me know, please, so that I can continue. Okay, that's good. All right, so so we're taking an entry from here. If this plays out this way, our target is this demand area here. The next target will be this demand area here. So that would be something like this. Something of that sort. So this will be our target, and the stop, we have this kind of scenario. This is how it's going to play out. All right, the sound is still breaking. What can I do? Okay, let me tweak one or two things, but if it gets better, let me know. If it gets better, let me know. Okay. Alright, so that's what we have on gold. So let's look at another pair. Let's say GBP NZD. Let's look at another pair. Alright, that's good. Okay, so now we have GBP. The sound, I'm getting some message that's still not very clear, but okay. So over here we have pound New Zealand dollar. So the weekly time frame is telling us bullish. We are in a bullish run. So currently we can see that this last week we had a bullish run that has overtaken how many candles? If we look at it, 1, 2, 3, 4. that this last week candle has closed above it, body closed above it. So that gives us the bias of having an upward move. So we go down to so we have this weekly high here that we can target maybe later, but now we have a bullish momentum ongoing. We can identify this area of demand here. We have also, so this fair value imbalance demand zone, where we have a fair value about imbalance attached to this demand area. So currently we have price breaking above this high, causing change of character. So all this we've seen here. Also, one thing we have to bear in mind is we have this area of consolidation, because this pair has been on an uptrend for some time now. So this on the daily time frame, you can see it's been, so currently it's been in this this area of consolidation. It's been in this area of consolidation. So on the daily time frame, we have let's say this is a break of structure, because we expect this should be a break of structure. Let's take this one here. A break of structure. So not until we have a break above here, we have a break above this area, this high, then we'll still be within this area. So once we have a break above here, then we can expect price, we have a break here, expect price to trace back to this area before targeting the weekly high. Before targeting the weekly high. Okay. Before targeting the weekly high. So this is an area that we could target, or once we get an entry from here, if it plays out this way, we could we could target one entry, or so your stop loss goes below here. Your first target will be here, profit here. The next one position you enter, your stop loss goes below there. Then you target the weekly high. So with this, you're taking advantage of the long move to this high, which is something that is more highly to occur. Because one thing we also have is we have this area here that we expect price to trade into. This is an area, this is a volume imbalance area that we expect price to fully fill it. So currently it's only traded to this way, it's not fully filled. So there's a high probability to have this fully filled, and then once that is done, we expect a break here. So once we have the break, then this is a possible scenario to look at. It's a possible scenario to look at. Okay, so this this is on the daily. So we can further refine it, but I was just trying to put this across the possibilities of getting into these different positions. So on the 4-hour time frame, we have our demand area okay. Okay. Yeah. Once I'm done with this, I'm going to have a look at BTC and see some possible opportunities there. Okay. So on the 4-hour, we will find the demand area to here. So we had this last candle before the move that caused the breakup structure here. So this now becomes our area of interest, and then on the imbalance we have it also here. So that's the 4-hour time frame, and then we target. Okay, so if we targeting an entry here, we put this target on the daily time frame. So if we kind of day trading, we shouldn't overstretch it, as this is quite a long way. So if we day trading and then we have this break here, we could expect price to come here, and then we take the targets to the previous high. So once we break above this high, then we anticipate it's going to go to the weekly high. So let's further refine this area. So currently we have price holding here, but this is the origin we are anticipating price to come to before we move to the upside. We are on the 4-hour. Let's go to the 1 hour to further refine our area. So on the 1 hour time frame, we can further refine our origin to here. We can further refine our origin to here. Okay. So on the higher time frame, we identify that this pair is in a bullish run, or it's an uptrend. So all that we are looking for is to buy, because it's an uptrend. We're looking to buy the markets. Yeah, of course there are some mini downtrend within the uptrend. So that's on the smaller time frames. We always identify some of these small downtrend moves, but we shouldn't forget what the higher time frame is telling us. Because what the higher time frame tells you is much more powerful than the smaller time frames. So this is the area we are also looking at. So we can see that over here we have all these areas of liquidity here, and then some imbalances that needs to be cleared as well. So this is what we marked out on the higher time frame. Let me take this out and redo it. So on the 1 hour time frame, we can put in the path. So we expect price to come to this area, and then we target the previous high area. We target this area. So now that we've refined our area of interest, we can see how our stop loss can also be minimized, because we have refined our area of interest to a smaller area. That gives us a better risk reward. As an entry. So this is on the 1 hour, so we can even further refine it on the 15-minute time frame. So what I was trying to put across earlier on was having um, two positions in place. So one is for your income building, and then the other one is for your wealth building. When I say wealth building, that's where you swing trade the opportunity as well. Where you swing trade the opportunity as well, because we identified an area on the higher time frame where price could revisit that area. So if I should draw, so this is the higher time frame target where the blue line is. So if we have this play out like this, we could enter two positions. Possibly if you have two accounts, one for swing trading and then one for day trading. So on your day trading account, your target is this immediate high, and then your swing trading account, you enter from this same place, but you leave it to run to aim the weekly high points, this area. Okay, so I believe that is clear enough. So we're only interested in taking trades from these areas. So if this doesn't give us what we are looking for, we're not interested. So we can even further refine this area by going to the 15-minute time frame, where, for instance, if you want to enter a trade and you have different areas of interest where we have one here, like now we have this demand area here. Attached to it is a fair value gap validating our demand area. So this is an area you can expect price to also get to. Let's see if we have already tapped into there. So currently we have price here, we haven't gotten there yet, and we have all these areas of liquidity that we expect price to come clear it up. So as it makes its way, this area of liquidity and the imbalance area act as a magnet drawing price to it. This is where we plan to take our trade. So what we are doing here is planning our trade, not that we just take our trade anyhow. As we see green candle, we take a buy. As we see purple candle, we take a sell. No, we plan our trades. So if price don't give us this scenario that we are building or we are planning, we are not interested. So this is what we are planning to carry out, because we can identify on the higher time frame that this pair is in the uptrend going to the upside. So I was saying that if you might just go through it like this, come back and then shoot down. So perhaps if we get to this level, what we want to see before we get into the trade is a confirmation entry. Let me take this out first. Delete. So as price gets to this level, or even at this level, any of these levels, what you want to see before you get into the trade is you want to see price making a tap into this area, then pushing up to break a structure, then coming back to tap into this area. Then this is where we continue to have. So we want to see a break in structure as price breaks above this area. So once price push down to tap into here, come back, break above this zone. So we want to wait for price to give us something like this. So we now look for a demand area here. This is looking messy now. Let me let me take this out so that to be much clearer. Let me take this out, push it up. So what I was saying is we want to have a confirmation entry. So as price push down to our area of interest, makes a high, come back, and then push up. So once we have a break of structure giving us that there's a change in character or change of character here, so this now becomes our area of interest on the smaller time frame, on the 15 minutes time frame, just to be sure that we not just to make sure that we getting into an accurate entry. This is imbalance, that is demand. Okay, so I hope this is clear. So this is the confirmation entry. So once we have this kind of scenario at these multiple areas, in any of these multiple areas, you can get into the trade. Because sometimes you may think that it's going to stop here, but it might continue to the next area of interest, which is here. So we have this here that hasn't been tapped into yet. We have this here that hasn't been tapped into yet. So once price gets here, you want to see a confirmation, something like this, before you get into the trade to the upside. I hope this is clear enough. So with that said, that is how I look to trade this particular pair. So as I'm showing you this, you can do the same thing on any other pair, in any pair that you trade on. And again, if you have any other pair that you want me to look at, I can also have a look at it as we are here together. Let's look at BTC USD. BTC USD. Okay, BTC USD. Since I already have some markings here, let's go to the weekly and see what is happening on the weekly. Okay. Okay, so on the weekly we can see a bullish engulfing candle playing out there. So this is a weekly time frame, so we might not have enough data, but on the weekly we can see clearly that BTC has been on the uptrend for all these times here up until here. That is pulled down back to this area, pull back, and then we have this bullish engulfing candle. So if I take this out, we can see that we'll be making higher high. I think I've done a lot of marking here. Hopefully, let me delete some of these out, clear this, so that we can look at it from this point on. Okay. So on the daily time frame, these are areas that I marked previously, and we could see that we had a tap in, and then from this tap in we pushed up, and then we had another tap in where we had another move out to. So we can see from here we are looking at the recent movement, which is from this point on the daily. So we can see that price is definitely in an uptrend. So on the weekly it's telling us uptrend, daily is telling us uptrend. So let's go to the 4-hour time frame. The 4-hour time frame. So on the 4-hour time frame as well, let's try to get something. So on the 4-hour time frame we have this consolidation here. Consolidation here after this massive move. So with this massive move, let me take this to the left. Let's analyze it from this point on. we've already had a tap in. So from this massive move to the upside again, we have this candle, this area here as our demand area of demand. So attached to this price coming back to tap into it. So if perhaps you saw this move to the upside earlier on, then maybe you marked this area, could have maybe tapped into this move up. But nevertheless, we have this area of imbalance currently filled. So we now will say this area has been tapped into. So let's look at this area as well. We can also make this area as the origin, because price have body closed above here, causing a change of character. Then we further had this break here. That is a break of structure. So we first had this change of character and then the break of structure here. So the origin of this, we have identified it to be this area. Let's put this as the origin to validate our area of interest. So from this point on, we had this break of structure here. Sorry guys, to its upward move. So that is what we have on the move. So that is what we have on the 4 hour. So let's further refine this with 4 hours. So let's further refine this. We go to the 1 hour time frame. So that's what we have identified on the 4 hour time frame. So on the 1 hour time frame, we can further refine this area we identified on the higher time frame to here, and then the imbalance area now becomes from here to this point. So this is how we have it on the 1 hour time frame. So let's see if we can further refine our next area of interest. So our next area of interest is looking a bit messy. It's not giving us a clear picture that we want, because we had this push down. So if we want to look at it, it's going to be from here, which previous marked area. So we will have a confluence with this previous marked area. So that's it. I'll just take this off that we marked on the 4 hour time frame. So this now becomes our area of interest, as a matter of fact, from the, so if it works out to be in the same zone, even better. So once price gets to that same zone, we have it confluencing with the fair value gap and the demand zone. It's even better. So we can be targeting our entries from there. As we know, the more confluences you have, the higher the probability of you getting your entry excellently. So we have these imbalances here, we have this demand zone here. So it now gives us on the 1 hour, it looks to be a very wide area of interest that we are looking at. So from this point all the way to this point. So that's why I said, if we ever come across something like this, we don't blindly enter the trade. We enter the trade based on confirmation entry. So if you don't have a confirmation entry, you're not getting in. Let me make that clear. Anytime you come into a situation like this, you use confirmation entry to get into the trade. Perhaps if you use confirmation entry to get into the trade and it doesn't work out, fine. If it works out, praise the Lord. That's good. That's good. That is good. Oops, what is this? Can you guys hear me alright? It looks like there's a break. Can you hear me alright? Let me know in the chat if you can hear me alright. The uptrend. That's why we look only. So this is on the 1 hour time frame, and we go to the 15-minute time frame where we can further refine these zones. I hope you got in properly. So okay, what we have here is it's a trade I took this afternoon. Which played out beautifully. So I came back, saw this break of structure here. So this on the 15-minute time frame. I came back, I saw this break of structure here, right here. So when I spot, and then I now came to mark this area as my area of interest, supply area, and then also attached to it was this area of imbalance. Attached to it was this area of imbalance, which I marked on. So I now put my entry here, and then price worked out beautifully. So my target was this area. So before this move started, this is the origin of the move. Let me take this out. This is the origin of the move that I identified on the chart, and then attached to the origin, attached to this demand area, is an imbalance. So this is what attracted price. We also have these areas of imbalance here that said no retest, no entry, no retest, no entry. So as we had a break here, I waited for the retest to my zone. So price tapped into the imbalance area and then sold off to my targets, giving me a nice this was a kind of a quick in and out trade. So it was 0.6%. so the risk to reward, I was risking, no, this is 2.8. So my risk was, let's see, my risk is 0.23. So I risked a small amount to get this nice risk reward trade here. So that is the same thing that we're talking about. Can you guys hear me? Because my system keeps stuck. Okay, so the next thing you have to look at for the imbalance attached to your area of supply or demand. Once you identify those two things, it makes it a valid area to be looking out for your trade from there. Okay, so okay, I was saying so there was a buy BTC from around Friday 6. Okay, I have something here on the chart. It says there was a buy on BTC from around Friday's 4 p.m. That's on the 15 time frame to today. We'll find this Friday's date was Friday. Come on. I hope you. Oh dear. What? Okay, so over here we have a quiet market. Was a bit choppy here, but let's see if we can identify any break of structure here for an entry. Okay, so we had set 4, so somewhere around here. So for what I can see here, price, we had a high here, we had a low here, we had a low here, we have a lower high here, or let's say a lower high at this point. This is not a lower high. Okay, we have another lower high, and then price makes it to this level. Okay, so from this point on we can see that we were kind of moving sideways, but price, I've marked this, it's kind of moving to the downside because we have this low being lower than the previous low. So we have here, so from this point it made this low, made a lower high, came back to make I didn't consider this because this one did not break below this point. So for us to have a proper downward trend, we only considering the swing highs that makes a new low as we move ahead. So from this point on, we made this low, came back to this higher low, came back to this lower low, and then from here price pushed back again to this point, making another lower high, and then from here we couldn't make a lower low, so we said the trend ended somewhere here. So over here we had a break, or called a change in character. So this will say change in character from what it was doing before, because we can see that it was moving down. Now we have a change of character. So from this point on we have to identify the origin. So the origin being the last candle before the impulse move that caused the change in character. So this is the last candle. Attached to this last candle we can also identify that there was some imbalance here. We identify this zone as our area of interest. We take the trade from here. So let's see, we go long on here. So we go long from this point on. So what will make you enter the trade is we had a bullish engulfing candle here, which body closed above the previous purple candle. So that is happening in the location that we want to take the trade, and our stop loss goes below our entry area. And one thing about your stop loss is you should always play within your maximum loss per trade. So if your maximum loss per trade is 1%, you should not give these highs. So from these highs, so from there on, if you target this high, that's you got filled probably 1 to 4.4%. Yeah, so this is what you have to do every time you get on the charts. So I have this moving averages on my charts. The reason why I have it here is, one, as I get into the trade from this area, or from these imbalance demand zones or imbalance supply zones, if perhaps I want to add on to my trade, I will use color change to add on to my trade. That is if you want to add on to your trade, you use color change. So for example, over here, this is the original entry. So over here we had another push down, and then we have price, another bullish engulfing candle here. We have another bullish engulfing above the 20 moving average. So if perhaps I want to add on to my trade, I could use any of these entries to add on to the trade that I'm already in. Another example is here, because I've already entered the trade from this point on. You could add on. We have another example here where I took my profits from this afternoon. That same area is where I have the 200 moving average. I know I have it very faint here, but this is what I mean. This same area here, this is where I have the 200 moving average here. So this is where I targeted to take my trade, and that is the same area as my demand imbalance zone that I marked earlier on. So if you entered the trade from here on Friday, you could have been in it till today as it hit these previous highs here, and that would have been a nice entry. That would have been a nice one. So I hope that is clear enough. And if you have any question, or if you have any other pair you want me to have a look at it, you can put it in the chat, and then we'll have a look at it. Oh, it's already gone past an hour mark. Yeah. Anyway, if you have a quick question, you can pop it in the chat, and then I'll do well to answer you. So with that said, with all this analysis we've done today, so our main target this week, as we have identified this pair to be in a bullish run or upward trend, we're looking to take an entry from this zone. So as I said earlier on, if price gets to this area, we use the confirmation entry to get into the trade if possible. We use the confirmation entry to get into the trade. Okay. All right. I think we will end the session here, and what I'll say is thank you so much. I believe you found value in this session today. So if you have any question, you can pop it in the chat. Other than that, we'll call it a day, and then we'll meet again next week. So just as we've gone through the chat today, it's the same way. If you sit behind your computer, you look for the areas of demand and supply, and then you target to take your trades from there. And you don't really have to be taking loads and loads of trades. You don't have to take loads and loads of trades, because if we sometimes do that, that's what results in a lot of blown accounts and all sorts. So if you can minimize the number of trades you take in a week, the better. In trading, slow is fast. If you can remember that in trading, if it is slow, you can build your account very fast. So don't be concerned if maybe you've reduced the frequency at which you were taking trades before, and now you kind of taking one trade per day or one trade per week. It all depends on the setup that you find yourself in. So for instance, just as I marked on here, is it on this chart? Let me go on the 1 hour. Yeah, so even on here, I think I did it on the other chart. So even on here, if we should have a price coming all the way here, and then we get a confirmation entry from here, what we could target is we're looking for long position. So as I explained, on your day trading account, that's what we look for, income. So in this area, you could target this previous high as your profit targets, and you could have another entry on another account, or even on the same account. If one is 0.5, you have another 0.5 entry, and then you leave that one to run to maybe the weekly high or the daily high. Let's see if we can identify any daily high there. Okay, so currently That's the daily high or weekly high, both of them, because this is the previous high that we've had. That's the highest point Bitcoin has been. So if we're still going to have a bullish run, if we're still going to have this bullish run, you take two trades, and then you close one to the previous high, and you leave the other one to run, targeting the daily high or the weekly high as we may have it. So this is the previous high here. Yeah, so as we can see, we also have all these areas of liquidity that hasn't been, and also areas of interest that hasn't been tapped in yet. That's why I'm saying you watch and then you take the trade based on confirmation entry. If you don't see the confirmation, you don't take the trade, just to avoid so many avoidable stop loss being hit. So with that said, thank you so much. I really enjoyed having you here today, and perhaps you haven't subscribed to the channel, click the subscribe button right here, so that anytime I come up on live or make a new video, you'll be notified of, as well as clicking on the notification button. Thank you so much, and I hope to catch up with you next time, next Sunday, same time. God bless you. Bye.